Welcome to the Swing Trading with Cycles channel. We're going to do an update on the broader markets today. It's March 4th, 2023. Important turning point here. Very, very important turning point. So we have what appears to be a daily cycle low. Who knows? We could obviously always get an undercut low. It's not about predicting price action. It's about analyzing it. But this is definitely what you would expect a daily cycle low to look like. We had a move above the 10-day moving average, and we closed above it by a long shot. Now, certainly, you wouldn't be surprised to get some consolidation from here, not just necessarily a straight move up, but this looks like a daily cycle low. And that's on day 46. And as always, take a look at the pinned comment. If you're new to the channel, welcome. That'll help you get up to speed, understand cycles, more importantly, understand price action. And speaking of price action, we almost formed a bullish outside candle. We missed it by just a little bit, which increases which means we may get follow through next week to close the deal. So what I mean by this, so this is week 16, 17, 18, 19, 20. So last week was week 20, which is a very fitting week to actually have a weekly cycle low. And so it's entirely possible that, so the bull case is that this was a weekly cycle low, which is just a higher low than this, which is a higher low than this, which is part of this overall bottoming process from this major low here. I mean, the trend is very clear. If you draw it up like that, then we have this pullback. That's a higher low. Another move up, which is a higher high. Another move down. What is that, folks? I mean, that's very recognizable, right? That's right. It's a higher low. And so the next move would be a higher high. Now, that's the expectation as we move into the daily cycle high. Friday was literally day one of a new daily cycle. But thinking about that bullish outside candle, again, that's when a candle makes a lower low, but then also makes a higher high. So this candle, the high on this candle is 40.52, and the high on this one was 40.48. So we missed it by 5-6 points. And so wouldn't be surprised to see the next candle, like the one that's going to open this week, that's coming up, finish the job, right? Imagine something like that. And so if you took these two candles together, they would together be an outside candle of this one. Now, the bull case is that we take this out too. So, imagine this candle does something like that. I mean, that would get a lot of people, because obviously everyone is screaming, the fundamentals. I mean, people are like, well, the price action, the fundamentals don't justify the price action. I mean, people would go absolutely berserk if next week's candle closed like this. Oh my God. Not to say that that's what's going to happen, but it's entirely possible. Again, especially since we're in a new daily cycle. The trend appears to be higher, at least for now, until we have a swing high on some time frame that is meaningful. So very possible that next week will be week one of a new weekly cycle. The bear case, now, always important to know what the bear case is, right? If we think about the bull case, well, let's think about the bear case here for a second. So if this is a new daily cycle, this one lasted 46 days. This one lasted 49. That's what these numbers are, folks. This one lasted 27. This one was really long, lasted 54. So imagine we have something that's a little bit of a shorter, something that's just 30 days. Let's just call it. Just picking a number. This is not a prediction. It's just a scenario, folks. And so if it did last for 30 days, that means we would expect our low somewhere around the middle of April. So this is telling us April 14th, let's say. What would that mean for the weekly cycle? So if this isn't our weekly cycle low, that would mean that the weekly cycle would continue to run until week 26. And that's actually very reasonable. So at this point, it's not it's a slam dunk. It's like the bullish case, the probability for the bullish case is just so much higher than it is for the bearish case. Because think about that. As bullish as this looks, I mean, look at this move here, the way you had this just oh, okay, wow, we got a new daily cycle. And then wham, look at that. This momentum to the downside as look at these candles. Look at this big candle, and then you have this kind of lower low well below this big candle. So big candles don't mean that we can't have downside. So imagine a situation where So it's all about how long will the daily cycle rally. Imagine a situation where it rallies for like, let's even say 11 days, and then it declines for the rest of the time, right? So if it rallies for 11 days, it declines for, call it 19, 20 days. So again, left translated, meaning it rallies for less time than it advances. So you have an 11-day like you have a 29-day cycle or 30-day cycle, let's say, but only an 11-day rally, maybe even shorter. I mean, this was your ultimate bearish cycle where we only rallied for 4 days. I mean, look at this kind of breakaway gap, and then we just like had this huge gap down. I think this was on the CPI number, right? Because that comes out at 8:30. So, and of course, we know that we have the next CPI coming up. So the next CPI print is March 14th. And so we could expect that that is going to be an important pivot point for the markets. So that's that. So what are the odds then that, what if we get a rally that actually tops out on the CPI print? So when you think about bearish scenarios, that is a very likely one where maybe the market just keeps running. Maybe it runs up to like right here, makes a double top, and then it collapses on day 8, which is the same day as the CPI, or maybe the day after, some kind of thing like that. So that tells you if we don't get a collapse by the time of the CPI, then maybe we're not going to have a left translated cycle. Maybe the weekly cycle is not declining, and maybe this is a weekly cycle low here on week 20. So really big implications here, huge. And so I'm not going to go through the other indices in as much detail because it's the same kind of story. Obviously the levels are different, but that's the big story here. And if you think about the monthly chart, I tweeted about this. This has just been consolidation for the last like 5 months. I mean, look at this candle. I'll get rid of that line. You see this big green candle, and then you have this red candle, but it's just basically an inside candle, and then another inside candle. And then we make a higher high, like, oh, psych. And then, like, this has just been one massive consolidation, which you could read as a bull flag off of this move, but you could also read this whole thing as a bear flag off of this move. So complex trading here, but the levels are really crystal clear. And if we think about cycles, this is potentially our bottom on month 31. And so this would be month 5 of a new long-term cycle, or it's month 36 of a short, and we're still like, so this would be, month 32, 33, 34, 35, 36. So it's very binary. If this wasn't our long-term cycle low, then that means we're going to get our long-term cycle low probably pretty soon. And you would think it's going to make a lower low here. At some point, it's like, okay, this is probably the low that everyone is looking for. And we're going to just have to, we're going to just have to wait for more evidence. And obviously, the way this weekly cycle advance plays out will tell us a lot. QQQ, same idea, different levels. Look at that. Looks like a new daily cycle. For the Qs, though, we did make a bullish outside candle. Look at that on the weekly. Look at that thing. So that is week 20. Again, definitely the kind of thing that looks like it could be a weekly cycle low. Like there's no reason why it can't be a weekly cycle low. And so you definitely have to give the benefit of the doubt to the bull case as this uptrend continues, as this daily cycle advance continues. So you can see the S&P wasn't able to make a higher high. This one did make that higher high. So again, a bullish outside candle. These things usually have follow through associated with them. So you expect a candle like this next week. And obviously, like the obvious level that it wants to test is this high here at 309. Let's see if we get there. So that's the Qs. And so the Qs are more bullish than the S&P right now. That should be pretty obvious from these charts. If we have time, we'll look at a ratio chart. And I didn't call this out for the S&P, but it also applies. We're on pace for a bullish outside monthly candle for the Qs. So you can see we dipped below. So the low from last month was 290. We got down to 288. So below it by $2. That, some would call that a bear trap, right, quote unquote, right? And so the target would be the high of last month. That wick that just is kind of standing out there. So that's 313.68, which isn't a huge amount of upside from here. So you could still see that happen and have this still be bearish for sure. but it does give you very crystal clear levels to, help to mitigate some emotion. Let's look at IWM. At one point, this was most bullish of all, and yeah. So the IWM did not make a lower low the way the indices did. And so for the IWM, it's actually on day 1, 2, 3, 4, 5. So that's important to note. IWM is front running the other indices. It's on day 5 of its daily cycle. You could read this as a bull flag, and this thing is trying to break out here. And on the weekly chart, same. So on the weekly chart, whereas the Qs made a bullish outside candle, IWM, the small caps, did not, because they didn't make a lower low. So that's actually more bullish. And it would mean that week 19 is our potential low, again, because it didn't make a lower low here. And that would fit, again, like you can see these charts, and it's important to recognize what a bottom might look like, so that if you have one, you don't miss it looking for something else. That might be it. Right? Look at that. Doesn't mean we don't ever come down, but the trend is up for now, at least. Obviously, we'll see what next week brings, but this is certainly this kind of candle generally leads to more follow through the next week. So that's IWM, and on the monthly chart, again, same picture as all of them, seeking out this wick here at 199. So that's about $9 up from here. And finally, we'll look at the Dow, which has been underperforming, or was underperforming. It has reversed pretty violently. So for the Dow, it's actually on day 2. So it bottomed a day before the S&P did, but not as early as IWM. So you can think of, so that tells you pretty easily, Dow is IWM, small caps, is the most bullish, followed by the Dow, and probably followed by the Qs. So you've got the S&P dragging, bringing up the rear, if you will. So that looks like a daily cycle low on day 45. And so those that are in the camp that the S&P is going to roll over into a lower low on the daily cycle, that seems less likely, because you have these other indices which have made it pretty clear that they made their daily cycle low already. Again, IWM and the Dow most specifically. And if we look at the monthly chart on the Dow, that wick, and this is DIA, the ETF that tracks the Dow, that's at 343.53. Now let's look at a ratio chart really quickly of IWM versus QQQ, because so we're starting a little bit of a rollover here. So this is your daily chart. We have this double bottom situation. So you could think of this as a new daily cycle, and it's potentially topping out here after rallying for 10 days, right? And this was obviously a much longer rally than 10 days. That was, how long did this last? And the way to think about that is this was a 21-day period where IWM was outperforming QQQ. So this is still early, this little breakdown. So we'll watch this. It's turning the weekly candle. So the weekly candle has almost gone bearish outside. So you would kind of expect that it's actually going to complete that move next week. So something like that. Next week's candle. So that's I'm guessing IWM is still doing better than SPY though. Yeah, so still ended the week green against SPY, and it's still in the daily cycle advance against SPY. And let's see if we look at QQQ versus SPY. Exactly. So the Qs are actually the one that like I'd say are in the most bullish position structurally. I mean, look at this break. And again, this is a ratio chart, but look at this gap, and then it's consolidated in the gap area. It's basically filled it. It filled it here, and now we're kind of moving. So this big consolidation at some point is going to break up, which suggests to me that the whole market goes higher, but QQQ outperforms SPY, and I'm guessing SMH is doing better than the Qs, right? So this is SMH versus the Qs. You can see we had this period of consolidation and a move up, and now we're having this other period of consolidation. After this, look at that, wow. So this tells me that SMH is the place to be. SMH versus SPY probably looking crazy. Yep, look at that. Look at that weekly chart, man. And that monthly Look at that long-term, like after, I mean, like semiconductors, is what SMH is, have outperformed S&P for a really long time. And then we had this period of underperformance for 2022, essentially. This is your monthly chart. This looks like a long-term bottom in October when the broader market bottom. That's what you would expect because semis lead. So this is actually a pretty strong piece of evidence that this October bottom was real. Unless we start to see this break down. And if we look at a quarterly chart, what does that show us? Ooh, look at that. Ooh, look at this thing. That's important to like, look at that. I mean, that says a lot. That suggests to me this is an important bottom. You know, like these other ones that we see, and look what happens after those, right? We get upside generally. You could call that one important bottom as well. So SMH, I guess you would. I mean, in terms of, I mean, that's obviously a subsector versus IWM. How are we looking? Yeah, this thing is just crushing everything. Look at this rounded bottom versus small caps. So SMH is the place to be. But again, that suggests that low that we had in October may be the real deal. We need more evidence to certify that, if you will. But that's the direction that this is all leaning in. We'll continue to watch the price action on this channel as always. Thanks for watching.